traders, welcome to another episode of the weekly analysis. So if you are new here for the first time, I'll welcome you to the community. What we do over here weekly is that I'll be analyzing and be sharing with you what are some of the news that you want to take note of during the week, as well as some potential setups that we monitor here ourselves, and hopefully this can give you some insights. And for those who have been with us for some time, thank you for your support, and do not forget to like the video and do subscribe to our channel, right, so that you get updated on every new weekly video that we release. Alright, so for this week itself, the key focus would be on the Canadian bank rate. Alright, that will be happening on the Wednesday night. This is in respect to the Singapore time. So if you are on any other time zone, do take note of this as well. And for the Thursday itself, what we have is the Euro minimum bid rate, as well as ECB press conference. So this would be definitely significant for the Euro currency itself. What we are expecting is that there's a low probability that they are going to further cut their rate, but what we are expecting is that the Euro economy is not doing well, and what we are expecting is that Draghi might extend its stimulus, right? So that might also weaken the Euro overall. Alright, so something to take note as well. And what we notice is that this week itself, there's not much data news for the US dollar. Right, so that's something that you want to take note as well, meaning most of the movement, I would say, right, will be caused by the other pairs instead of the US dollar itself. Alright, so having that in mind, let's jump into the technical part of it. Alright, so the first pair that we'd like to go through with you this week is the New Zealand Swiss franc. Alright, so something to share with you this week is the three pairs that I'd like to point out for this video. Alright, there will be more than one setup on this similar pair. Alright, so something that I wouldn't say it's uncommon. Alright, but when you have this kind of setting ups, is it more than one setups on the same pair? How do we deal with it, and what is the thought process going behind in making a decision on which one to take or whether to take both? Alright, so when we look at this H1 New Zealand franc chart, alright, what we have over here, right, we have a triple top on top, alright, and if you look at the RSI, we do have a divergence, and what we saw is also price makes a lower low, breaking the neckline. So what we have over here is a valid setup, alright, waiting for the 618 retracement. And what we identified is that we actually have this 618 retracement over here already. So this trade is already been active, right? So for those who subscribe to our signals, you should have this trade running, alright, if you have taken this trade, right? But what I want to share with you is what is the expectation of this pair, right? So this is one setup, alright. The other expectation that we have over here is that if we pull Fibonacci from the recent low, right, to the recent high, you see that price retraced towards the 382 level. Alright, so this gives us a potential bat pattern, and the bat pattern completes around the 886 level. Right, so what is the expectation, right? The expectation is that price will complete, alright, this 618 setup, this triple top divergence setup, and what we are expecting is for price to roll over, alright, all the way towards, all the way towards the 886, and once this back pattern completes, we'll be looking to enter a long setup on this bat pattern itself, right? So let me bring you through some of the thought process, alright. Let me drop a horizontal line at the completion of the bat, alright, and a horizontal line around the 886 level. So what I like to do is to go up on a higher time frame on the H4, alright, and I'll look for the overall trend. Right, the overall trend is definitely still on an uptrend, and what you identified over here is that this completion bat pattern has some minor structure in the previous level as well. So definitely, I would say that this bat pattern, right, in terms of probability of winning, alright, is definitely higher than the 2618, alright, the triple top and then divergence setup, because that is still considered a counter trend trade. Alright, so once again, when you go through your processes, your trading plan, then you need to decide for yourself: are you a trader which are fine with trading both trend continuation and counter trend, or are you just a pure trend trader? Alright, so this is something that you have to consider. But for us, we do trade both counter trend and trend continuation. So what we want to is hopefully price will roll over, alright, and hitting both our target before and entering at the bad pattern. Alright, so this is something that you want to take note of on your end as well. Right, the next pair that I want to bring you through is the Aussie Yen. Alright, so Aussie Yen itself, similar on the H1 time frame. What we identify over here is price is currently in a consolidation phase. Alright, what you see over here is a very nice symmetrical triangle. So price can easily break up or break down. Alright, but what is the advantage of having some of the methodologies that we use over here is because we are not reacting to price, but we are responding to it. Alright, what I mean is that we can plan ahead, in expectation of what we want price to do, or not want, but what we expect price to do, and hence be prepared for it. Alright, so very easily, alright, let's draw in the Fibonacci tool from the recent high to the recent low. And what you see is that price comes in, alright, retrace towards the 50% retracement level. And this gives us a potential bad pattern. And this bad pattern completes around the 886 level. Alright, I can use this level. Alright, bad pattern completes at the 88.6 level. And then I'll just drop a horizontal line over here. Alright, so if price breaks off of this triangle, alright, for price action trader, you can trade this breakout as well. Alright, but for us, it's not part of a trading plan. We wouldn't trade those. So if you are those who trade price action, alright, when price breaks out of this triangle, you can definitely look for a long. But what we want is that, should this triangle break out and price reach the 88.6 retracement level, alright, which is around the 88.3 level as well for price, what we do is we expect price to bounce off this level. So we'll be shorting, looking for a short opportunity around here. Right. So what if price bounce down? Alright, so I want to show you is that we do have setups for those as well. Right, if you pull Fibonacci tool from this A leg to the B point, right, what we see is that price comes down towards the 786 retracement level, and that gives us a butterfly pattern. Right, so if I draw it in the butterfly pattern, you have this X, A, B, C, and D. So butterfly completes around at the 127 level. Alright, so once again, if price comes down and break this triangle at the downside, what we do is we expect price to bounce off at the 127 level, right, which is around the 85.7 in terms of price. Right, let me zoom out to the higher time frame and show you what's happening over there. Right, so on the H4 time frame, which is considered the higher time frame, price is still on an uptrend. Alright, and it's currently consolidating over here. So what we are expecting is, if price comes down to the 127, we do have some structure levels over here. And what we expect is that this is just a retracement and an expectation that price will continue further up. Alright, and for the bad pattern itself, what we are expecting, alright, definitely there isn't much structure resistance in the past, alright, but what we are expecting is as a counter trend trade, alright, so should price breaks up over here, right, with the Fibonacci confluences and the harmonic pattern, what we do expect is it's a counter trend trade, and we do expect that price respected this level and bounced off for a small retracement before going up higher. Alright, so there's some of the thought process that we have in mind, when we plan out certain trades. Alright, so we are more of planning ahead, of what price is going to happen, and should it happen, what is the action that we're going to be taking. Right, so this is for Aussie Yen. Alright, so if you are trading this pair, you can take note. We have a counter trend trade, alright, which is the bearish bet, and a trend continuation, which is the butterfly itself. Alright, and we definitely, if you are trading the price action setup, we do have a very nice consolidation triangle pattern setting up as well. The next pair I want to share with you in this video is the Kiwi dollar itself. Alright, so this is very similar to the New Zealand franc. Alright, just that the other setup is different. So the first setup I want to bring you through is the same. Alright, what we have over here is a double top, but if you look at the RSI, we do have a very clear divergence. Right, so and the neckline has been broken as well. So what we are waiting for is the 618 retracement. Alright, so this is the level, the 61.8. So this is the level that we'll be interested. Should price comes up, alright, we'll be looking for shorting opportunities over here. But let me bring you through to the higher time frame. Alright, if you look at the higher time frame, the overall trend is still on the upside, right? Meaning that this setup that I just showed you, right, moments ago is consider a counter trend trade. So once again, you need to decide for yourself whether you, as a trader, and then in your plan, right, do you plan for a counter trend setup, right? Are you according to your rules and according to your plan, are you able to take such counter trend trades? If not, you might want to skip it. If it is, then you can take it into account, this kind of setup as well. But what I want to show you is that overall what we have is an overall uptrend. Alright, so for trend continuation setup, we do have something called the 1 2 3 4 setups as well. So it's something very similar to structure trading, right? We use it interchangeably, alright? Sometimes we call it structure, sometimes we just call it 1 2 3 4 setup. But the concept and the method behind it is very similar. So what we want is to capture on the retracement of the trade, alright, and enter at the retracement following the larger trend. So what we have is that this is a minor retracement and price breaks the previous high. So what we want to do is we want to pull Fibonacci tool, alright, from the recent low to the recent high which broke the previous high. Let me delete the others one. Alright, and what we expect is that for price to come down towards this level, which if you identify, right, coincides with a Fibonacci as well. So the previous structure level over here coincides with our 61.8 level. So what we are waiting for is for price to come down towards this level, and we will be looking for a long opportunity in a continuous of the trend direction. Alright, so this is a trend continuation setup, right? And if I put in more Fibonacci confluences, what you see is that, right, from here to here, what we have is also some Fibonacci confluences, alright, the 141 extension and the 1618 extension. So this gives us extra confluence because there's more than one Fibonacci level happening around that region, alright, and of course this is built around this structure level, the previous high that has been broken. Alright, so if I zoom it down to H1 again, alright, so what we have in expectation is this, right? We expect price to go up, hit our counter trend setup, and then coming back down, exiting the counter trend setup in profit, and entering a long setup in expect that the trend will continue higher. Alright, so this is some of our expectation and our plan for price to happen, alright, and we'll respond to it according to the market scenario itself. Alright, so I hope that this video, alright, give you some of the insights of how the market operates. Alright, you can definitely have more than one potential setup in a similar pair, and in this week itself I already showed you 3 of the pairs that have more than one setup in itself, and this setup is not just in a similar direction, but these 3 setups are all in opposing direction, right? Meaning one is on the sell trade and then one is on the buy trade, and how you actually deal with it. Right, so a lot goes into your personality as a trader. Which are you comfortable at? Are you a counter trend trader or you a trend continuation trader? Right, so I hope that this will give you some clear ideas of or insights of how you can plan your trade as well. Other than that, happy trading, and I'll see you